Hi, this is Sheldon here from the Currency Advisory Desk with today's report. Well, the rupee fell to new lows. In fact, we were looking at the rupee trading pattern yesterday, and we saw that the way the rupee has moved against the dollar, it's really shocking. In fact, the major reason why the rupee fell to such lows is because of the food security bill. Now, traders or the market participants have taken this in a very negative manner, because with a current account deficit which is running at such a high level, and if we have the Indian rupee also which is weakening on a daily basis, and then you get in the food security bill, this only worsens the condition. So the markets have taken this news with a pinch of salt, and this has not gone down very well with markets. In fact, the rupee, it closed at an all-time high yesterday at 66.24 against the dollar. Now, yesterday's movement was very, very fast and very rapid, and we saw the movement of the Indian rupee which depreciated by more than 3%. Now, this is a very great concern for the Indian economy, because basically if a currency moves by more than 3% in one day, it shows the state of the fundamental economic system that's prevailing in that particular country. I mean, we are used to seeing such movements in equities or in shares or of individual stock prices as such, but not in currencies, and that too of a major country, a major developing country. So that speaks itself about the fundamental factors that are prevailing in our country. Now, all eyes will be on the GDP data, which will be released this Friday. However, traders are already factoring in that the GDP would come in lower than 5%, and this will cause more harm to the Indian rupee from a fundamental point of view. Let's look at what's happening internationally. Now, the German IFO business climate came in positive. It came in greater than expected at 107.5. We're getting a lot of positive and good news from the European economies as well as the United Kingdom. In fact, even if we saw the previous data that came in for UK was also supportive, it was positive for the UK economy. Moving on to the US consumer confidence increased to 81.5 as compared to an expectation of 79.6. So even in the US, we are seeing that the recent few data that have been coming out in the United States have been positive. Now, what is happening is that since these data are coming in positive, we are seeing the funds, first of all, flowing not just from India but from entire Asia. They're going back to the developed markets, and this is what is causing the turmoil everywhere else besides India. In India also is the same story. However, along with this, you have the addition of the political system that is there right now, and that is creating more havoc for the Indian rupee. Now, markets were jittery due to the fears of the US military action in Syria. In fact, the CBOE VIX, that is there, it was trading at around 17 levels. And the dollar index is presently at around 81.24, which is up by 0.02%. Now, we expect the dollar index to move up further, because as there's more demand for dollars or dollar denominated securities, we will see a build up in the dollar index. People will be buying more dollars as such to invest or to trade in the United States. So this is something that's going to move up. And even though there is talk, or there are rumors about a possible war happening in Syria, wherein US military action will dictate what's going to come in the coming few days from an international point of view, we don't read too much into it, even though there has been a spike in crude oil prices if we look at the current data. But yes, this will be one factor which would be driving the markets internationally. But looking at the Indian point of view, well, we have a lot of problems, domestic issues that we need to resolve first before we can look at what's happening globally. Let's look at the technical levels for today. See, the dollar rupee gave a close at around 66.41. This is for the August futures contract. In fact, the August futures contract will be expiring today, and we'll be starting off with the September contract. Now, for this particular rate, we have a bullish call, and we expect you to buy on dips. The support is at 65.47, and we have a resistance at around 66.88. For the euro rupee, there is a support at around 87.45 and a resistance around 89.07. For the pound, there is a support around 101.20 and there is a resistance around 103.10. And for the yen, there is support around 66.63 and resistance around 68.56. If we look at the euro and the pound internationally, they have given up some gains due to the strengthening rupee, due to the strengthening dollar. But in the Indian perspective, there is absolutely no pulling back all these currencies, because primarily they are driven due to the dollar rupee rate, that is. And as we can see, the dollar rupee rate has just moved in one direction, it has moved upwards. Let's look at the events that are going to shape markets today. Well, firstly, we have the GfK German consumer climate. Now, this data will hold a lot of importance, because this will give you the perception that's prevailing in the German economy, which will in turn impact the euro. Secondly, we have the Bank of England Governor, Mr. Mike Carney's speech. Now, Mike Carney's speech would be important because as of now, UK has been following a increased monetary stimulus kind of a situation, but with the incoming data that's positive, we would like to see what would be his next step, whether he would claw back like the Fed, or whether he would still continue with the same policy. So that would impact the pound in international markets. And we have in the US, we have the pending home sales and crude oil inventories in the United States. Now, these two sets of data will not happen during our market hours, but however, we can see some impact tomorrow on the opening. Probably there could be a gap up or gap down opening depending on the pending home sales data, because this will drive world equities, which in turn will affect the domestic market as such. Now, we also have the equity expiry, the FNO expiry tomorrow. So we advise our traders not to carry any large overnight positions, because firstly, the market is volatile, and secondly, if there's any news that's coming on the international front, it will affect your position in the market. So stick to your intraday trading plan, and we expect to generate some decent amount of profits based on that. Well, that's it from the currency advisory desk. Thank you.